Welcome back to FreightWaves Now. In this week's edition of On the Spot, I'm Tony Mulvey, joined by Kevin Hill. Kevin, how's it going?
Very well, Tony. Very well. Good to talk to you again. We're going to talk about the spot market here, the first time in a little bit.
Yeah, and it's an interesting time in the market. I mean, you start looking at where things are, and it's you're seeing volumes down. You listen to Knight-Swift's kind of pre-announcement with that coincided along with their announcement of the acquisition. I mean, overall, it's a tough place to be right now. I mean, when you look at it, you look and your conversations, channel checks that you have, I mean, is there any positive sentiment out there in the market right now, especially around the spot market?
I've been talking to a lot of freight brokerages lately, and there is a lack of green shoots. You know, what they made famous in 2008, 2009, during the Great Recession. Economist Bernanke was talking about green shoots. We're seeing green shoots in the economy. We're not seeing any green shoots in trucking, and through my channel checks and the people I'm talking to, it's about the same. Everyone's waiting for the market to turn. They're looking for positive signals, but those positive signals just aren't around.
Yeah, and we'll bring up a chart. It's one I like to look at, just kind of shows where we're at in the market, our outbound tender volume index. I mean, you can see the decline. So I took the average just for Q2. Those are what those dotted lines are going to be. You can see that spread between last year and this year. And the problem with last year is we had come off the peak already. The market had already softened by this point, and we have seen further deterioration in the market. I mean, I look at June, and you see throughout the month, it was just down. I mean, we're back to where we were kind of in May, which doesn't lend a whole lot of positivity for the market moving forward in Q3, because Q3 is typically not the greatest time for freight.
Not the greatest time for freight. And another thing I did hear from a number of different people is that even the produce coming out of California right now is dragging. So the entire market is dragging. I'm sitting here looking at OTRI at 3.52%. Pretty well as low as you can get. And that really hasn't moved at all. It's been sub 4% for how long? I don't even know. But, that's not a good sign. That's certainly not a green shoot.
Yeah.
I'm looking for green shoots. I can't find any.
Yeah, and it feels like when you start looking like at macro trends as well, right, to see if there's anything in the macro economy that might present a green shoot to kind of be a catalyst for freight demand, doesn't seem like it. Seems like there is a lot of headwinds, especially when you look at the consumer. I mean, obviously, Supreme Court kind of made their decision on the student loan forgiveness last week. Those payments start back here relatively soon, right? I mean, we're talking within the quarter. I mean, that seems like a pretty big headwind, not just from a rate perspective, but really from a volume perspective.
It does. Interest rates probably won't get hiked again, but there's still talk that they released the notes. Interest rates still might be on the creep before this cycle ends on that. You mentioned the consumer. The commodities are tumbling a little bit in the market right now. So, again, as you were saying, I can't find any green shoots. I've been looking under rocks, but all I can find are gnarly weeds.
Yeah, I mean, I think the one positive, and I don't even know if it's really a positive, we'll pull up a chart here. It'll be the NTI and contract rates, and the spread has narrowed. I think that might be the one positive, but it doesn't mean things are going to get better. It just means that are we kind of getting to a place, and really when I say better, I mean, we're still talking a pretty big spread, because this is the NTI that includes fuel versus...
What is the spread right now?
If you look at it, if you exclude fuel from both sides, it's like 76 cents. So it's 17 cents below when the NTI includes fuel versus the contract rate that doesn't include fuel. So you're talking, spot rates are still at a discount, even when they're that all-in rate. I mean, we talked about this last year, right? That spread, when it hit 90 cents, that we're going to see compression in contract rates and kind of get to this normal level, and we just haven't gotten there, which, again, it seems like contract rates still have room to fall, but spot rates have kind of found this like little stable point, it feels like.
Well, Tony, we've been talking about this for a year now.
Yeah.
Over a year, I think, is that spread between contract and spot. And it was 92 cents, 96 cents, and the spread is too high. We're looking at, you said 76 cents right now. That's still way too high. So where's that compression coming from? 2024 is going to be a tough negotiating year. For anyone doing bids, because the market's not turning, the market's not doing much of anything, and it's going to be hard to if you're a carrier or a broker to justify and keep those rates up with a spread like this. And I don't see any squeeze of the spot market. So I wouldn't expect a jump up, barring hurricanes, and something happening shocking that's external to the system.
Yeah, I don't think there's anything. We'll pull up the spread. I actually have that chart. It's our last chart. Chen is showing it, right? So I guess it's 77 cents. Okay. So, but I mean, 2019, it was 42 cents. That was the average. So we're still talking 30 cents. Likely not going to come from spot rates going up that much. So it means a lot of that compression has to come from contract rates.
It does, and we're not going to see a turn in the market until we see a movement, a real significant movement in that spread, and we haven't seen it for a year now.
Yeah, absolutely.
I've been, like Groundhog Day for us. We just keep on talking about the spread and the gap between the contract and the spot rate, and it seems like it's going to go on forever, but it won't.
Absolutely. Well, Kevin, that's all the time we have for this week's edition of On the Spot. Thank you again for joining me. We'll be sure to check in with you again soon, but right now we'll take a quick break. We'll be back with more FreightWaves Now.